Guess who's back? Back again. AMC's back. GME's back. Back again. Back again. What's up? How y'all doing today? All right, guys. I know we had a nice screen day for both AMC and GME, but right, like we just gotta stay cool, calm, and collected. There's no reason to, do anything crazy, right? But right now, the short sellers are like, oh man, I can't keep this down, right? It's not adding up anymore, right? They're at the point where this thing is gonna explode in their faces, right? And I'm gonna prove to you that shorts have begun to close out very small positions, right? But I have a little bit of proof that hey, some of them are getting out, right? All right, cool. So you remember I'm not a financial advisor. It's not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only, right? So today, guys, let's jump into it. I don't want to make this video too long. I'm gonna just try to give you the facts today, right? And we're gonna get it right because but it was a good day, right? It is a win for the apes. Okay, let's move it over to here. All right, before we get into that, let me show you the fact that the average retail investor's portfolio has lost 32% of its value in this year's sell-off, but that hasn't stopped them from buying the dip in stocks, this research firm says. All right, so this article is from Markets Insider. Retail investors have been sticking with buying the dips in stocks even as the value of their portfolios has suffered. Vander Research said the average portfolio drawdown is 32%, the sharpest decline since the firm started tracking the data 8 years ago. The S&P 500 has paired some losses in recent sessions thanks to retail investors buying the dip. All right, so I'm gonna point this out to you guys. It is important, right? More confirmation, right, in my opinion, that the squeeze is here, that we've gotten smarter, right? That we know that this is when you do make the profits when you buy low, right? You sell high, not the opposite. So that means that retail is learning and educating themselves, right? And we're not just living in our mom's basements, right? Not like being dumb, just dumb money, right? How they try to call us all that, the names and all that, but we're starting to learn, right? So check this out. Amateur investors continue to buy into the U.S. stock market's downturn despite a steep decline in the value of their portfolios, and their moves have helped the S&P 500 avoid deeper losses in recent sessions. And the research said, right, they're telling us, they have the data to back it, right? So they're always tracking us, right, seeing what we're doing. Net inflows into U.S. equities by retail investors were hovering near all-time highs at 1.3 billion a day on average on a 3-month basis, the research firm said in a weekly update. All right. So right here, that coincided with the average portfolio drawdown of 32%, which is the worst performance by retail investors since the firm started tracking data in 2014. Stock holding have been hit hard during a slump in the U.S. equity stock market that dragged the Nasdaq Composite into a bear market and the S&P 500 towards the edge of one. All right, cool. So just proving to you that right, we're buying and we're holding, and when it comes to AMC and GME, nobody's selling, right? Only the weak ones, right? But the real ones that know what's up and they educated themselves, right? There's a reason why they're not selling. All right, guys. So I just want to point that out. Let's go to Fintel. Here's some proof, right, that shorts have begun to close out. So if you go to owners and you go to buyers, we're gonna go here. There's a new position. They just bought more shares. BlackRock, right? Like this folder bought 2,000 shares. These are positions. The white ones, they're just positions that are holding. So there's 60,000 shares in this BlackRock, fund or whatever. Where is it? Here we go. So this new green means that they closed out 19,000 shares. All right. So in my opinion, that's why you're seeing this little pop right now, because it was on the 25th, right? It just got reported. Remember, there's T+2. And then that's one short that closed. So Wise Strategic, whatever. And there's another one here that still has a short position as it's white. So negative, they owe 7,000 shares that they shorted. Yeah, so it's something, guys. Like remember, there's tons of hedge funds that are short, and it looks like the collateral checks are here, so we have to keep watching and seeing if any other ones closed out or about to close out, right? So it's interesting what I'm saying, like it's gonna blow up in their face, right? Because this keeps running out of shares, right? I know this is Stanko Tracker, it's not the most official website or whatever, but look, there's problems 300,000. To the good part is that the fee keeps rising, not by much on AMC, right? This is for AMC. Let's go down. But there's a lot of open interest, and that's why they're trying to keep the price down, right? Because if this thing starts going into, the 15, 20, 25, 30 price range, like by the end of Friday, you're gonna see, you know, volatility because they're gonna have to go and buy shares in order to cover those, right? So that's what you see there. The dark pool, so they were shorting us 40%. Now it's up back up to 61%. Right. So that's interesting, right? They were doing it, but I'm sure today it's gonna be up in the 60 some percent. All right. Let's go over to GME real quick. See 0% or because there's no shares according to this, and there's 11,000 calls in the money for GME right now. But check this out. When the shares do pop up, it's not much, and the fee is going bananas, right? So 104% at one point in order to short GME, right? And it spiked up. I believe it went from the past few days from like 20 some percent now to 100%. So there's some high volatility there. And again, they have a lot of open interest too. And that's what I want to see, right? GME and AMC. I know they're going to go at the same time, guys. It's the algorithm. You know, that's just my opinion. You can have your opinion too, but that's what I believe. Here's more proof, right, that the shares ran out. There's a different website, Stocksera, for AMC. It is showing, right, 000 for a while. And then they printed more, right? And all of a sudden they went up. Right now, supposedly there's 250, but the fee has gone up a little bit. So I want to see that fee jump way up, right? We can look at the chart, guys. Just a nice strong day in an uptrend, right? In the 2 minute, amazing. What is interesting, of course, is that, you know, it's a nice day, but we need to get past these levels right here. So it came right up to it, right? So it's around the $12 range, and then 13.30, 13.50, right? We can break through there. I'm pretty sure we're gonna go up here to the 20 or $21 range, right? It'll mimic this move, all right? But remember, there's a lot of things coming. The rate hikes I explained in the last video. So yeah. Also remember that everyone's tracking this, that it looks the pattern exactly. And now it's actually like right here, right? So we might see a little bit of red before the big run, okay? And that's what everybody's tracking. I know Rico's probably going nuts, right? Rico's Trades, I believe that's his YouTube on YouTube. He does a lot of technical analysis. I'm sure he's going nuts right now because it's like just copy paste that freaking pattern and it's the same shit, right? All right, here we go. So this is for GME, guys. 26%, right? Today, short interest, absolutely ridiculously high. And then you got AMC too at 22.2%. And that's just the quick data, but let's go over here to the other part where let's read this. Watch from CHECADO Chicado 2 on Twitter. He put right, AMC Army for reference. According to Ortex, these are the highest all-time cost to borrow numbers for GME 106.04 and AMC 183.38, both occurring on May 1st. Oh, that's old. What the? Oh, because it's an all-time high, but this update is from today. You can see, right, the 22%, 100% utilization now for over 2 months, and the shares on loan 166. So you're telling me 32% of the free flow is on loan, and this is how I explain it to my friends, right? When they ask me like what's going on, because utilization's maxed out, right? But somehow these shares keep popping up and stuff. But you see that 30 some percent of the free flow is on loan, when retail owns supposedly 90 some percent of it, and we've been buying the dip, right, according to, you know, this article. And so that's what I'm saying. Like, we're primed, guys. Like, it has to be somewhere near where something has to blow, right? Because this is maxed out. Like, how can they keep even shorting? How can they even keep borrowing shares? Like, where do they come from, right? So you see all that. That's what keeps me, you know, confident, and that's what pumps me up, right? Because of this data here. And I know it's not the clearest data, right? It's manipulated, but I'm comparing it to the past, right? When AMC went from 12 to 72, there was only about 90 some million shares on loan. This is GME, so it's at 26%, you know, free float, short interest, 100% utilization, shares on loan 21.89 million. It's insane, guys. Like, everything's at the max, right? So when they start covering those, that goes down and the price goes up, okay? Because they have to buy, right? There's a lot of things going on in the market. So yeah, guys, that was my update for today. You know, good day. Hopefully it continues. We'll have to see. You know, the S&P 500 keeps getting rejected around the $400 level. So we need to see the S&P also pop and rise, because that'll carry us higher too, right? To like the $15, $20 range. And it can, you know, start causing some trouble for these shorts. And you see the cost to borrow for AMC is skyrocketing, for GME even more, right? It's insane, over 100%. And at one point, I think the max was like on Ortex over 300%. I saw on Twitter. So, guys, hang in there. We got them right. We're so close. And Top Gun comes out this weekend. It's gonna do massive numbers. So I'm sure there's gonna be a lot of bullish articles that are gonna come out, right? But I hope you have your spacesuits ready, guys. Let's get it. We're gonna go to the moon, all right? No doubt. Not financial advice, right? That's just my opinion, but that's what I'm thinking. So peace out. See you later.